First and foremost, since I do work for a broker-dealer and I am a registered agent of the broker-dealer, I have to disclose, and I'm going to be more apparent with this. This is not to be considered advice. This is simply, as I say in the description, this is just my perspective, and the sole intentions of these videos is a way for me to give my thoughts and perspective. It's the whole reason why I started these. That has not changed. It is, for one, I enjoy discussing the subject of trading in financial markets, and it's easier for me to convey it in a video because it's easier to convey both sides of any market. So, as always, again, trading's risky. Seek true financial help from a professional that's licensed and all that good stuff. And, again, I give Al Brooks credit because that's who I have studied all these years trading and who I still continue to study. That's why I bring him up. But again, trading's risky. Use your discretion and all that good stuff. So let's get forward with this video. This video is going to review the 13th of January 2021. Can't believe we're already in 2021. And this is the Emini. So, as everyone knows that watches these videos, sometimes I will review a day, when like right here, I'll go bar by bar by bar. Other days, I'll just start from an overall perspective. And, again, another disclosure here. When I'm doing this, of course, I've already seen the day. So don't take it literal when I'm doing this, and this that I have not looked at the day already. Of course I have. I'm never going to just, I may go back all the way down here and just start going forward and not really remember what happened. But it's not like I'm closing my eyes, opening this chart and turning on the recorder. Of course I know what happened. I've had people comment that I'm making these videos and purposely trying to elude and pretend like I know what I'm saying. No, it's just walking through each bar. So anyways, more of a little rant there for a second. So here's the start of the day. And I don't remember how much I talked about this day, but I don't think I did. So therefore, I'm going to discuss it right now. But bar one, bull bar, tight trading range, 50-50 chance to get a breakout up or down. Here's the high of the prior day. Here's the low of the day. We're probably going to test one or the other. It's probably not going to be an inside day. And again, it's tight channel. So odds are we'll get a small second leg up. But where's the pullback? Is it this low? Is this tight enough? We pull back all the way down to here. I would not just be buying and holding long. You can, not really all that great. Wait for the breakout. So nothing yet. Some bears will short stop up here or up here. And as you can see, that worked, but look at the deep pullback you had to face. Strong bear bar, but again, is it always in short? It might be, but it's one of those, I think the bears may need one more bar, and it's trading range. The markets are reflective. They tend to do what's been done in the past. So we failed here, and here, and here. We broke below this range. We broke below it over here. And guess what? We're back at this range. So what do I think is going to happen? Well, big bull bar, follow through bar, not really great follow through. Big bear bar, follow through bar, bad follow through. Big bull bar, bad follow through. Bear bars, okay follow through, but reversed up. Bear bars here, but we were in a fairly tight channel. That was tight, but it reversed. So, bad follow through. If I was short, I would definitely get out of long. If I was short, I would get out of shorts above this bar. Aggressive bulls will buy, stop below, betting on some sort of double bottom, maybe measure move up from this to this. It really doesn't matter. What's most important is, let's see what the follow through gets. Of course, the bulls want to break out. Not great entry bar, but it was a bull bar, so it's not a reversal bar. 3 consecutive bear bars, probably going at least a little bit higher. Stop down here. Odds are you'll get a small second leg up. 4 bull bars, starting to look good for the bulls, but again, until there's a strong breakout. There is not a strong breakout, and this could just be a simple by vacuum test of these highs. And real quick, for anybody new to my videos, it's the same thing Al talks about. Notice what I'm doing when I'm talking is I'm giving 2 sides to the argument. So what did I say over here? I mean, yeah, in all fairness, I said it's a bear bar. I probably should have stated the fact that it's a little bit of a surprise. So you have a lot of bulls that will buy the close, betting on no follow through. You have some bulls that will buy the close, and if we get another big bear bar, they'll take the loss. You have other bears who will wait to sell until we get a big bear bar. You have bulls that'll wait for this. This was disappointing enough that bears are trapped. So over here, this is good for the bulls, but it's still somewhat disappointing. The bulls want to see strong breakout. Now they'll accept, continued bars down or continued bars up, kind of the opposite of this. But the problem is what traders wonder is this a buy vacuum test up here or up here? Kind of like how this ultimately was a sell vacuum of these lows, even though we broke below it. That's what traders are wondering. So this is, again, it's consecutive, but there's not the urgency everybody wants to see. There's not this urgency. We're still in this range. So going up, still going up, trying to form a double top, too tight of a channel. Odds are the first reversal down will fail. Breaking above these highs, but we're still here, so what are we going to get here? And that's a lot of consecutive bull bars, and we just, the bulls own the market in terms of time, but we just didn't get far. Outside down, tight enough channel though. Again, bulls will probably buy this low and buy lower. Some bulls will buy above here, but they're going to use a really wide stop, and probably better if they can scale in, because you may get this, a small second leg down. This was kind of a strong enough minor surprise that you may get a second leg down. So it's really a 2-legged pullback. Leg 1, pullback, leg 2. Can you buy the close here and put your stop down here? Sure. But the second part is most important, and that is your stop's down here. So if you are buying the close, you need to understand stop's down here. So again, maybe a wedge, 1, 2, 3, really doesn't matter. It's 2-legged pullback, minor reversal. A lot of bulls will just start buying closes. They expected this to be weak, started to take back profits, and they're buying a pullback, maybe at the moving average. It's a test of this breakout point, and we may fall all the way down to here, test this breakout point. Strong bull bar, okay, so 2-legged pullback, strong bull bar, not enough reason for bears to stay short for a swing. You had bears selling here, selling the high of this up here, betting on a scalp, maybe a test of the moving average, some disappointment. So bulls are going to be interested to see what are the buy the close bulls going to do. It's reasonable to buy this close. And I forgot to mention, look right here. I'm going to buy this close, stop down here. So you buy the close, take profits. You buy the close, take profits. Buy the close, take profits. Or maybe you just stay long. Well, you're disappointed. What are you going to do up here? You're going to set a limit order to get out at the highest by the close bar. Similar to down here. Bears sell the close, disappointed, tried to get out of break even, and they failed. And you could argue, this part kind of gets more just, I'll discuss this in a second. Look what happened right here. So traders sell the close, and they sell more here and get out here. Now, there's one issue I have with that logic in this situation, and that is it's a day session chart, and it's ignoring what happened in the Globex session. So I don't really, the logic in there. If this was a day session chart, sure, it'd be like this over here. I'm going to sell this close and sell more here, get out 50% here. That makes sense because it's during the day. So I think this is kind of more conceptual. Traders know that it's a reasonable target number. So what happens is some traders they sell below this bar, knowing that this is the average entry of this sell to close, and they get out. And they expect it's a sell vacuum. Other traders say, here's kind of a major high or low. We had a strong breakout here and here. If it was a buy vacuum, maybe we'll do the same thing if we test the breakout point, which happens all the time in a trading range. What do I mean by that? Well, kind of like here. In a trend, strong breakouts usually don't fall below. So strong breakout didn't fall below. And look what happened. It went far below it. Where's another example? This is kind of one, but not really. Strong breakout follow through. Trading range typically test obvious support. So in other words, where I'm getting at is in a trading range, you have obvious support and resistance for stops, and they typically need to be further than where you want. So if I'm buying here, stop down here, what happened? I got stopped out. So if I'm buying anywhere in here, I probably need to stop a little bit below here, maybe below the 50% pullback. You could also argue this is 50% from here to here. So there's many reasons, but anyways, what I'm getting at is bulls buy the close, they're going to scale in, and they're going to want to get out of break even if they think it's weak. If they think the trend is strong, they won't get out of break even. Kind of like here. Bulls buy the close, they buy more lower. This is strong enough that they think it's going to at least make a new high. So what do some traders do? Instead of buying here and buying more, and in other words, instead of getting out at this close, they get out at this high, or they get out a couple points above the high. Or they think it's a breakout test of here, I'll get out at the low. So anyways, what's going to happen here? Okay, boom, disappointment. So this is your first little indicator of disappointment. We couldn't even get above the high. Bulls are not ecstatic to buy. Okay, couple legs up. I need to see a breakout of this. Otherwise, this is just more of this trading range. And here you go. It's confusing. Take a look at the price action. You're getting bad stop entries, and you're getting bears are selling below bull bars, scaling in, getting out of break even. Okay, here's a double bottom. If this is a strong trend, you should be able to buy above it and put your stop down here or here, and price goes higher. But look what happened, it couldn't trigger. So now we have a larger double bottom testing these lows, but a micro channel, fairly tight. And what's going on here? Why can't the bulls, they finally got the breakout here. So this is, okay, it seems like it's strong. And again, look at the confusion. Hey, we have a really big bull bar. I could finally buy above it and put my stop low, and we're going to race up. Well, not exactly. My risk is big. So is this a 60% chance price will go to here before it stops me out? I don't think so. This is just buying at the top of a range. And that proves my point. More traders sold it, and other traders were, again, they're disappointed here. Maybe they didn't get out here, but look what they did. They definitely got out of these closes here. It's a lower high. So it's a triangle, 1, 2, 3, 1, 2. So let's see what happens. So strong enough breakout, maybe you get a second leg up. But my whole point is there's 100 reasons as to why this is happening. We're not breaking above this range. If we keep failing to break above this high, well, what are we going to do? We're going to test back into this range. And where's the open of the day? Here. So you have to be always wondering, we've been going up for a couple hours. We're not drastically far from the open. It's somewhat in the middle of the range right now. Therefore, we may test the open, which is this green line. Okay, we're starting to break above the range. That's good. So is it by the close yet? Is it a successful bull breakout? Not really. Bulls probably need a little bit more. What makes this bar any different from all this other than it is breaking above a high? Okay. Finally, a strong bull bar. So is it by the close? It very well might be, but you're still in somewhat of a trading range. Maybe not from here to here, but you could say here's a high, here's a high, here's a high. So, and again, one of the things about a trading range is there's multiple ways to draw resistance. 1, 2, 3, bull break out of a channel. Maybe it's something like that. What's the follow through look like? Bad follow through. We're also up here. So bulls will buy the close. But again, a lot of bulls will be disappointed, and some may get out below, some may try to get out of break even. We went above this high over here. We failed, excuse me. Went above these highs, this high over here. What are we going to do? We're probably going to fail. Possible measuring gap. But again, it's important to see what happens at this close. Bulls buy the close, scaling lower, and look, tried to get out of break even. So this is a sign that bulls are somewhat disappointed. Starting to channel up. Starting to channel up. So what's going on right here? Well, I think this is also a Fed day, by the way, but another thing is we are trying to form a gap. So bears tried to fail once, tried again, they're failing. If we keep going sideways and we can't go down, we may get another bull breakout. And that's what we got. So big outside up. Strong enough surprise you may get a small second leg up, but again, 3 pushes, 1, 2, 3, 1, 2, 3. You know, this is a channel. This is arguably the bottom of the channel. Here's a spike, here's a second leg, third leg, here's a breakout, start of the channel, second leg, third leg. So it's somewhat nested. And maybe it's something like this, and you know, something like that. Don't get too caught up in how it looks. It's more or less the importance of its trading range. 1, 2, 3. Bull breakout of a wedge. 1, 2, 3. Bull breakout of a wedge. First leg, pull back. Second leg, pull back. Third leg. Bull bar closing on its high. Another bull bar. Another bull bar. Again, 3 pushes. 1, 2, 3. And what's going on here? So we have an opening gap here. This gap closed. Boom, big bear bar, okay? Strong enough bear bar, you'll probably get a small second leg down. Maybe we'll test this range. This channel again. So we may not get to the open of the day anymore. Start of the channel. Probably will get here at a minimum. Strong enough bear bar, probably will get a second leg. Disappointing follow through, so increases the chances of a trading range. 75% chance you're going to get a trend line break. All that means is a bear breakout below this channel, and we can do that by going sideways. We can do it by getting a big bear bar. Probably going, you know, again, sideways, disappointment here. Follow through, or a second leg down, disappointing. Double, you can call it a double top, so bear bar, pull back, first leg down, pull back, second leg, so 2 legs up, double top, 2-legged pullback, and maybe a wedge, 1, 2, 3, but we failed to trigger. Big bull bars, not really great. Also an obvious target here. Went below the target and immediately reversed up. Do you buy here? You can, but channel's fairly tight, and what's the expectation? Probably we'll get a second leg from this sell-off. And this risk is fairly big, so I think more traders bought this low, scaled in, and will use this to take profits. They also bought this low, scaled in. They're going to probably use it to take profits rather than buy. What happened right here? Well, it's the same thing I talked about up here, same thing I talked about here, same thing I even talked about over here. It's sell to close, not ideal, but some traders will say it's sell to close. They'll sell and they say, you know, darn, I sold way too late. It's a trading range. I'm going to try to get out break even. So I'll sell here, I'll scale in, and, you know, the traders that tried to get out the low close, they couldn't do it. But the traders that were willing to sell and take a small loss, you know, maybe instead of if the close is 225, maybe they try to get out at 325 and take a 1-point loss. They got out. So 2 legs up, arguably, and boom. So what happened here? Well, it's a bad stop entry buy above a bear bar. Bears will sell, scale in higher, get out. This is all trading range. Getting late in the day, and there's the next day. Hope this video helps overall. You know, it's a confusing day, and it's a limit order day, and it's a trending trading range day, which that means it's a broad channel. Trending trading ranges are basically broad channels. What I mean by that is we go sideways for this many bars, we get a bull breakout. So, you know, at this point, it's not obvious that it's a bull breakout. It's still part of this channel. Then we break above the range, and by the time it's obvious that we're in a breakout, it's too late. We're selling off, we're going sideways, we're in another trading range. By the time it's obvious we're breaking out, guess what? At this point, if you buy, you're buying the high of the breakout, and you're disappointed. So, trading ranges are notorious for when the breakout's obvious, it's almost too late. And that's why you have to be really quick to anticipate what is going on. Hope this video helps.